So today is March 22nd, 2017. Yesterday was the first day of spring. And to read the papers, you would think that people had never seen a down day in the markets, which is fascinating to me. One of the things that I want to bring to your attention involves what I call the narrative or the story. So I'll just go ahead and type out what I mean by the narrative in the markets is only truly understood through the lens of predictive software. That is to say, unless you know or can anticipate what the banks were going to do, you have no idea what's truly happening. You are reacting as opposed to being proactive. And so I'll use two different examples here to show a shift in the narrative. In this indicator, this is a NinjaTrader indicator called the Flux Orion, like the star constellation, the Flux Orion. It has a series of predictions in the upper right-hand corner. We talked about this last week and the week before, so far as telling us when the next buying pressure days and selling pressure days are in the temporal queue, how far in the future before the tide shifts. So if you think of the tide at the ocean or in a bay or wherever you live along the shore, perhaps the tide comes in, the tide goes out. When I was a child, we used to visit my middle namesake, my Uncle Patrick. He had a really small place up in Cape Cod back when he was sick, and in the evenings, I don't have very many memories as a young child, but I remember in the evenings the tide would go out, and my parents took us out one time, and we walked out into this huge area. It was very muddy, and people were digging up clams where many feet of water had been hours prior. So that tide was going to come back eventually. Well, these time cycles behave the same way. These are energy swells and energy dips, and instead of water coming in and going out, this is energy that causes traders to, when the tide is in, feel optimistic about their chances for their prospects for profit. And when the tide goes out, aka the red pressure times, the selling pressure times, they're less than optimistic. In fact, they're probably mildly paranoid and anxious. And so there's a narrative that takes place here that I want to go over here with you in regards to when the banks are about to turn or trend reversals. And you will see this narrative play out on very small time frames, and you'll see it play out in very large time frames like this daily chart. It is a fractal pattern in that time, the smallest patterns are just simply micro versions of the larger patterns in time. Okay, so I'm going to take you all the way back to September of 16, and I want to follow the narrative with you. So we have an instance where selling pressure was expected, and historically what I'll do, because we are a visual species, is I'll take a line and I'll put it right next to this dot. And I'm watching to see how does price react near the highs of the time of the selling pressure when the tide goes out. This is a time where the banks are expected to sell because the energy cycle is at a deficit. People are feeling anxious and paranoid at this point. And so you can see in this instance that the banks do in fact take the opportunity to drive prices lower until the next buying cycle time. Okay? Here's the next part of the narrative. We arrive at a point where the flood comes back in. The energy that causes people to feel exhilarated, optimistic about their chances in the market arrives back. And we watch to see how price reacts at that point. And you'll see that relative to the dot, price moves higher and higher, and we have actually two really big days. And then the market sort of settles into a sideways pattern, and we arrive at the next selling pressure time. Very similar pattern as the previous. Price cascades away. We have that large drop day. People are screaming, jumping from rooftops, cats marrying dogs, until the tide comes back in. We arrive at the next bottom. The tide arrives back in. Here comes that helpful energy in the markets. People are singing Kumbaya, holding hands, buying stocks. Price goes up. Now, here's where there's a shift in the narrative. Okay, and watch closely. We arrive at the next energy deficit. This is a time where we're expecting the banks to do like they've done in previous tidal cycles. And this has nothing to do with the tide per se, but I'm using that analogy to help us here. The banks are supposed to sell and keep prices suppressed until the next buying spree, that energy cycle, the green dot. But can you see here, there's a switch. Prices go down, and you'll remember this is right around the time of the election. And then look, Bob, do you see how it comes all the way back up? And then there's a pierce. There's a breach. Okay? When you see people buying when the banks are supposed to be selling, and vice versa in a moment, it is indicative of trend shift. Okay? It is indicative of a trend shift. Something is happening. And the opposite of what you expect to see is most likely going to take place for a while, at least until the next cycle. And so right here is a critical breach. It's what you might refer to as an inversion. This is a time where banks were expected to sell, and they gave permission for prices to go higher. Okay, so right here at this location, we could have said they're done selling. Prices are about to rise significantly higher for a while. On this date, November 9th. That was the first indication. If you were an options trader, if you were a stock trader, if you were taking longer term positions in the futures market with multiple lots, this was a day you had an opportunity to trade. And you had a perceived risk just below the low of that candle. When this happens, and I'm going to teach more about this particular pattern in our upcoming Flux Edge conference, May 1st and 2nd in Las Vegas, we begin to focus more on the upcoming buying pressure signal. We begin to focus more about the upcoming buying pressure signal. Let me explain a little bit more about what I mean by that. If you have a signal that's supposed to be selling pressure, Okay, pay close attention here. And then the market starts to do this. And closes above that area. What I start to watch for, I look right. Because what I see happening here is a breach. It's a collapse. It's a collapse in the natural rhythm of selling pressure. And so this tells me that the sellers who were responsible for pushing the market lower on an institutional level were pulled away. They were pulled off the field. There's this great scene in the movie Braveheart where William Wallace gathers all of the people to fight Longshanks, the King of England, right? And his whole plan hinges on the nobles. And he gets the nobles together, and they're all on horseback, right? And here's William Wallace, and here's the King of England over here, if I remember this scene right. And so the way his plan is going to work, he's going to fight these guys, and at one point he's going to raise his flag, and the nobles with their horses and their lances are going to come and slaughter the English forces. Well, when he raises his flag in the movie, the nobles turn tail and ride back to their castles because the UK has promised them land and new titles. And so they double cross Wallace and they leave the battle. And so when you see a breach like what I'm drawing here, it immediately directs my attention to when the next green dot is coming. Because if the sellers were called off the field, they're preparing for an onslaught. They're preparing for a slaughter. And the slaughter is going to occur at the next buying pressure time. Does that make sense? Brent, does that make sense? Try to stay with me. I'm moving very procedurally here. Okay, so in that instance, when there was a breach, all of your attention should be directed to the next buying pressure time. Because if they've acquiesced the field to the buyers, this will be an accelerant. This will be an accelerant. That day, that energy, when it arrives, there'll be even more enthusiasm. Okay, so that's when the first shift took place. So this tells me now we're in a buying trend at this phase when you see that breach. When I see that, and we'll look for it today intraday on a 1 and a 5 and a 60-minute chart, you'll see this pattern recur all over the place. So now I expect to see higher highs and higher lows. Now follow me. When we get to the next selling pressure time, I'm watching, Brent, for that breach. I do expect to see mild pullbacks. I expect to see shallow retracements and consolidation. But more importantly, I expect to see punctures. The nobles leaving the field for Wallace to be slaughtered again. Okay? Now, my software is missing a red dot here. I don't know why. There should be a red cycle somewhere along in here for my Orion, and it's just not here. So I'm going to draw one in by hand for now. I can go back and look up the exact date, but for now it's supposed to be here. The next green dot comes in, and you'll see that we stay above the dot again. And then, Brent, we have another breach. The market comes up and just ticks that upper red line and lets me know Life is still good. The buyers are still in control. We get to the next buying cycle when the slaughter is supposed to start, and you'll see that's the next place where the accelerant is poured on the fire. I'm anticipating congestion, a mild pullback or a retracement, and or an abandonment at the next red dot. And you'll see back in January we have another puncture, another abandonment, and I look right to the next accelerant moment. See how this works? I have until the next selling pressure time. Now here's where things get interesting. I'm watching for the puncture. Okay, so these are all punctures that tells me all things are still good. Now watch what happens here. I'm going to blow it up. There's a shift. There's a shift that takes place. Bob, do you see what happens back here at the signal from March? We start to have some unusual occurrences. Can anyone key in on what's taking place here? What's going on? Brent, what happened along those dates here on March 8th, March 9th, March 14th? That doesn't look like an accelerant. Wait a minute. What are you sneaky bastards up to? The buyers that are supposed to be super gung-ho over at Goldman, the buyers that are supposed to be pouring gasoline on this uptrend over at JP Morgan, they're not so enthusiastic, are they? They're not riding down into the valley on their Budweiser-sized horses with their armor gleaming, screaming into the battle, "We will drive prices even higher." They're like, meh. And more importantly, mechanically, there's a puncture of the dot. There are multiple punctures of the dot. There's weakness. And so, Brent, when that happens, I switch philosophies. When there's a puncture here, remember, Bob, how we were looking at the next signal as a low-risk opportunity for an accelerated move up? Well, in this case, when there's a puncture, I'm looking at the next signal for the possibility of an accelerated move down. And so when people scream, "There's no way we could have known about this. The Obamacare healthcare plan is not going to go through, and that means no tax reforms, and I don't know how these people know that, but that's what the market did yesterday." No. Yeah, I want you to stand up in your living room and point at the screen and go, "Shut up." No. They have been planning this move. They have been planning this move since March 8th. They've been planning it since before that. But our first clue, remember, no one is handing us an invitation to that party. No one is handing us the memo. Oh, hey, we're going to drive prices up for 14 days straight. We just wanted you to know. The phone never rings. I never get that call. But with a little investigative legwork, we can see the shift. All right. So this changes the narrative right here. This is the first place we say to ourselves, maybe their trend is going to start to reverse. Okay? which means we mark the higher high right here. Okay, we mark the higher high. Now we have a lower high in place, and I'm not saying the trend is going to collapse and we're going to have another 2008 recession. I'm saying that this is the very first place the trend will start to destabilize. So there are two ways a trend destabilizes that I've observed. And again, a lot of you are way smarter than I am. You have way more smarter abilities than I do. But I generally see two things at trend reversals with this type of narrative. I either see large drops or extended consolidation. And by large drops, you don't have to use much imagination to understand. We're just looking at, total societal collapse. We're just looking at candles that sort of do this, and they make a run straight down to the moving average, usually. Okay, I don't anticipate that, although it's possible. I do, however, remember in the past, when these types of shifts occurred, that the market will go into a prolonged consolidation phase. There are people who, even though someone comes in and says, "It's over, Johnny, it's over," they want to believe it's going to go higher, and the banks will profit off of a consolidation range. It happened not too far in the past when we had a series of higher highs and then a narrative shift took place. And I want to just remind everybody. Can you see right here, Brent, where this was back in August of 2016. Can everybody see where prices started touching the green dot right there? And then we had the selling pressure time just to the right. And we had this precipitous drop. Do you notice how the market went into a range, Uncle Bob, for a while? They made a run for the moving average. The next green dot, the tide kind of got restored. But do you see how it fell into that pattern, everybody? Okay, this is an exact replica of what we just saw take place over here to the right. Okay. So I anticipate the market occupying this sort of area here out into and through April moving forward, based off of this pattern and based off of that reversal. Okay, any questions about that? The narrative shifted here, and the narrative has just shifted here, the first time since November. Now, you don't have to have the Orion tool for this. There are other tools available to us. If you own the Flux Investor package, you have the daily cycle marker tool. And you'll notice that same pattern took place using the phase 1 and the phase 2 signal. Here's the phase 1, here's the phase 2. And if we just take a line and we draw it through, we had our first puncture in the opposite direction in quite some time right here. This is the first place you go, we had a touch here. And when you see that, whether it's on a daily chart or a 5-minute chart or a 15-minute chart or a 30-second chart with your Flux predictive time signals, these indicators for NinjaTrader and TradeStation. I want you to immediately look back at the last battle, the last hill that everyone died on. And I want you to say to yourself, all right, this is the candle that got everybody sucked into the last big move. Many times you'll see, if you follow things like volume, you'll see a high volume bar right there. This is called a climax bar, right? The equivalent sexual sound. Ah! Right there. That's the end. And then right here, they're luring in those people who missed the party. Hey, I'm sorry, Susie's mom's in town, and the kids had this Christmas play, and I just got here now. Are we going to go up again? Yeah, we're going to go up. Okay. Hey, here's 100 contracts. I don't want to miss the next big move. And it's too late for those guys. It's too late for those retail traders that were sitting on the sidelines. But the banks lure them in. They let them get inside. And then, again, look right. Wait for the next signal. And Daniel, you'll see that your risk on this candle was not very large, was it? The same principles, in fact, kick in. If you use the dot as a stop level, you'll see, in fact, that the banks knew exactly what they were going to do. And if you sold the ES short at 23.70 quarter, your stop was just above at 23.81.75, 23.82 area. Right? And so far, again, if you're an options trader or if you're just looking for big moves, you're down almost $40 from that original breakdown, with your stop somewhere in the $11 mark. So about a 4-to-1, 3.5-to-1 risk reward off of that last drop. All right. So that is the narrative. And if you just follow those very basic, very simple rules, whether you're using a Flux intraday time cycle marker, you're using a daily cycle marker, or an Orion indicator, you will be able to anticipate not only the major move coming up, the trend shift, but you'll also be able to anticipate the sort of area the market's going to occupy over the next several weeks, and not be too surprised when you see it happen, when you understand what somebody was supposed to do and what they did instead. Okay, so that's the narrative. Today was March 22nd, 2017. We'll follow up on this in the coming weeks to see if, in fact, we saw what we were expecting to see. So, in conclusion, work through the settings, work through the filters, A/B them as you go through. You'll begin to identify the filter values that work across a wide range of markets, a wide range of time frames, and you'll take note of them. You'll have your favorites. And a lot of my favorites came from customers. A lot of my favorites I figured out that I like. And eventually, you're going to reach a point where you have the right number of signals on the chart. You'll see that it's working going forward. We've been watching this NQ chart for the last hour and a half, and we knew that 932 was coming. Look at what happened at 932. We know that 937 is coming, 947, 10 o'clock, and 10:11. And so it was reliable back here when we were watching it all play out live, and it's forward testing reliable now. These are all good things. So the heart of the matter, when we go back to when we were studying this Oregon Trail method of finding the time cycles, work your way through each of the values, identify the ones that are working good, make notes which ones are doing really well, and then start to keep a catalog. because these represent sort of these resonant piano tuning forks. We can apply a 5/7 stochastic or D-stoke. We can apply a 3/5 stochastic or D-stoke. We can apply a 210 MACD. We can apply a 9 or 8 CCI. And we know that if we apply any of those to any time frame, we should be close, if not right at, a too good to be true chart. And if you don't see that with these, then we'll look at, on Friday, I'll record another class on how to use intra-market analysis or inter-market analysis. But as of right now, I just want to show you what to do with these basic filter settings that we've got. You would do the same thing with a power zone if you wanted to add that. If it gave you more pivots, if it gave you more accuracy, put that on your chart as well. But if it doesn't, leave it off. There's no reason for it to be on there if it's not adding to the accuracy and adding to your confidence, adding to the resonance of the time cycles, using these NinjaTrader TradeStation indicators on the chart. Okay? So good lesson. We're going to work with this. This is phase 1. The next class will be inter-market analysis. Inter-market analysis, where we look at signals from other markets on top of the current markets. And then we're going to look at horizontal analyses using the Flux Flashback histograms and the Flux Flashback time cycle markers. Chris says, by the way, those of you that want to know, if you're going to use the power zone, Chris says to use a 21. So if you're watching this video and you're conducting your own experiments, Chris says when you test the power zone, use a 21. Or, I'm passing all the info on, Chris, or a 55. A 21 or a 55. Good notes. So thanks, everyone. We'll get this video wrapped up, uploaded to the YouTube channel, and I'll send out a notice later so that you can go back and watch it and try your own experiments.